Leading the Dow today, Visa. Caterpillar was the big laggard. Over in the S&P, it was Advanced Micro Devices, the winner. L Brands, the biggest decliner. Brutal day for that retailer, down almost 11.5%. Stephanie, retail has been so strong, and consumer discretionary actually was up pretty well today. So you see a standout on the downside like L Brands, and it really makes a mark, leaves a mark.
Yeah, I mean, I think the takeaway this week is the consumer is really strong, and I feel really good about the economy because the consumer is 75% of the U.S. GDP. Not every company is doing well in consumer, but certainly there are a lot of them. We can list the names: Macy's, Nordstrom's, Kohl's, Walmart, Target. I mean, the commentary coming out of these companies and on the conference calls, the confidence levels that they have had, all of them really, has been spectacular. And I think that it is something, and it does speak to the fact that all of these heavy investments that they've been doing over the last several years is starting to pay off. So I think you're at an inflection.
Speaking of the consumer strength, Dallas Fed President Robert Kaplan joined us just in the last hour of closing bell. Talked about the economy, talked about consumer spending. I asked him how much staying power this consumer resurgence has. Here's what he said.
Even before the tax cut, the good news about the U.S. consumer, which is about 70% of the U.S. economy, is the U.S. households have been deleveraging literally for the last 8 or 9 years. So if you look at household debt to GDP today, it's much lower than it was 7 or 8 years ago. And so the consumer's got ability to spend. We've got a strong job market, which further bolsters household balance sheets and the ability to spend. So we think the consumer's strong, and we think the consumer is going to provide a strong underpinning to the U.S. economy, not just this year, but into next year and the following year.
That's pretty bullish outlook on the consumer, Charlie. How are you playing it?
Yeah, that's the only thing that's disconcerting is it's becoming a consensus view, but we really do believe it. People have been anchored in this idea that the economy can't grow much more than 2.5%, and now it is growing much more than that. Tax cuts are having an effect. There's a wealth effect with the stock market up this much. So we believe the economy is in better shape than people think, and it's going to continue to help the economy.
It seems like in general, Steph, that the market is at this kind of now what moment, right? You have earnings just about done. You had this kind of slow march to the old highs, touched it, now we're kind of sagging back below it. And you have, on the one hand, this great fundamental picture everyone agrees with, and also fourth quarter, probably you're going to get some kind of a rally, but then you have a lot of stuff in between, a lot of noise surrounding it. So where does that leave you? Yeah,
no, I mean, this is perfect because today was exactly what you're talking about. It was all macro, right? Because you're getting towards the tail end of earnings, a couple of more to go, but we're all now hostage to the macro, to trade, to tariffs, to politics, to everything. It's kind of annoying as a portfolio manager, but at the same time, because we're long term, we're using that to our advantage. If the stocks fall and some of our favorite sectors fall, like industrials, like energy today, we're in there buying and aggressively because the reactions on a day-to-day basis to the stocks are really incredible. So they give you opportunities, and so that's the way we're looking at it, trying to ignore the noise, if you will.
I mean, the strong dollar has really been an anchor. Went up today. The Chinese currency went down, which the market doesn't like to see these days, and you had commodities all lower across the board. Energy and materials got whacked today. Are you a buyer of those kind of stocks on a dollar move?
I mean, it's not, well, but I mean, on these kinds of days, you're absolutely having that happen, right? That is, you're seeing the industrials and the materials, particularly the materials got hit hard. But over the last couple of weeks, actually, you've seen a reversal as the dollar has actually pulled back. Right. So, look, I think if the dollar can just kind of stay here and not really shoot up, it's the velocity of the speed of the dollar in terms of what makes me nervous. If it goes up in a big way very quickly, that makes me worried. If it can kind of stay measured, I'm still worried about it, but I'm less so. But that gives me the opportunity and the confidence to be buying these sectors.